Okay, thanks everyone for joining. Thanks everyone who's watching us right now. I'm having here an amazing panel. I'm looking forward for minutes of discussion around what is happening in the fintech world, what is happening in the financial industry nowadays, and where is the world heading? What are we going to see in the time to come? What are we seeing already as new changes in the way business works in the financial industry? And I'm extremely happy today to have two CEOs of banks with us. One, supposedly, you know, the old-fashioned, but we know that's not entirely true. The largest bank in Southeast Europe, Banca Transilvania, Omer Tetik, the CEO. Thank you, Omer, for joining us.
Thank you for inviting me.
Ricky Knox, from Tandem Bank, probably one of the most dynamic challenger banks in the UK environment, you know, fighting, if you want, to some extent, the incumbents on a number of layers. And then my colleague and partner in FintechOS, Theodor Blidarush, the CEO of the company, who I guess our role is to sort of mitigate in between and make things work for those that are, you know, challengers to become leaders, for those that are leaders to stay leaders, with the help of technology. Now, I'd like you to just share with us, you know, we are living very interesting times. How did these, you know, weeks, months that have just passed changed your business?
Why don't you start, Omer? We were just talking about this.
Yeah, I mean, definitely, I try to avoid speaking about what will happen, because it seems that all the consultants or the advisors, different authorities, nobody was forecasting what will happen, what could have happened these days. But everybody knows now what will happen in 2030. Well, and there are different scenarios. Everybody is recommending us to close branches, to make optimizations, or not to do anything. But the idea is that we discovered some qualities, some competences that were within the bank. We were, I was saying before our chat, that I was also thinking that some of the changes that we did in the last 2 months, in the last 8 weeks, will happen to maybe to the next management of BT. I mean, it is too early. The Romanian customers will not accept it. Our people will not embrace it. But actually, we managed to do things very quick. Customers accepted it very quickly. So from a very cumbersome on-site in the branch account opening process, we moved to online account opening in a period of 4-6 weeks. We launched it, and then daily thousands of accounts we are opening, and we are also, we are proud of ourselves, but also we are ashamed that we didn't do it earlier. So we were paper for a long time. But we have a different opinion about ourselves as well. We got to know our customers, although it was a lot of social distancing and a lot of digital interaction. We understood our customers even better, what they can do, how we can interact with them, and what are their expectations from us. So I think, although I wish it wouldn't have happened, it was an opportunity for us to have this lesson. Otherwise, we were having all our projects for the next 18 months, next 24 months. Now we are making plans for the next 18 days.
No, that sounds obviously slightly different experience from over here. I have to say there is an element of similarity in that, for example, you know, we've long been partially working from home, debating whether we could possibly all leave the office. What about information security? What about our customer records? And then click, the next day we were all working from home. In fact, we did one practice run on the Friday, and then on the Monday, the government announced that it was going to happen. So we'd had 1 day of practice, and we didn't actually get back to the office before we were all working from home. So I think it was obviously, interestingly, it's actually worked extremely well. Productivity in the areas where we very specifically measure it, particularly in software development, and in operations and customer service has increased. So it turns out they were having too many nice chats in the call center before. But But the overall, the impact has been very positive for Tandem, in that there is obviously a sort of seminal shift to digital, which has just been accelerated by potentially, as Omar was referring to, probably 5 years in a matter of weeks. So that's been extremely helpful. We've seen a real increase in uptick, in particular, oddly, in some of our savings stuff. Sort of savings side, there has been increased demand on the sort of lending side of the business. But one of the interesting features of the UK is we've obviously, because of furlough, a lot of people have not lost their jobs. Unemployment has risen slightly; it's not risen very much, and so a lot of people are being paid, either their full salary or 80% of their salary, and they're not given the opportunity to go to the pub and spend that money, or go to a restaurant, or do just about anything with it. So they've actually been increasing their savings rate. So we've seen, we have an auto savings product that sort of automatically detects how much money you've got left, and that's been recommending almost double the savings amount per week and per month for our customers. So we've seen that type of feature actually being used quite effectively, and also building a safety net for people so that if and when they do get some bad news, in October as furlough ends, they'll actually have a bit more put aside and be better prepared for that. So, it's definitely been, a tough time for everyone. I think, a lot of people, UK has the dubious distinction of being number 2 in the global charts for COVID deaths, and essentially the highest death per population in the world, although our friends in Brazil are trying to reclaim that crown from us. But unfortunately, so obviously that has meant that people have lost loved ones, generally parents, grandparents. So that's been, extremely sad and a difficult time for people. At the same time, from a business perspective, it has been a very useful shot in the arm, accelerated a number of pieces. And to give one example, we, in terms of credit scoring, we had long drawn in a number of different sources, but a lot of our primary credit scoring was done using bureau data. Despite the fact that we gather open banking data, we gather, signals from the internet, etc. One of the interesting things has been it massively accelerated our adoption of some of our more advanced credit models, because of course, the bureau data is now almost irrelevant, because, where you were, what you were paying 2 weeks ago or a month ago, which is what the bureau can tell you, did you miss 2 months ago's mobile bill, is no longer relevant in a world where, potentially, sort of 20% of the workforce are on furlough, and, a large chunk of those may become unemployed at any point over the coming 2-3 months. So, actually having much better signals around credit has been extremely useful, and we've adopted some of those models in recent credit underwriting.
That's great. I know on our side, we're a small firm in fintech, and we get all the mixed feelings. Some things are going up, some things are going down, but definitely all clients are extremely active and extremely demanding of solutions, because everything needs to be about digitalization. Theo, what is the feedback that you get from other banking clients that we're interfacing with?
Look, I think I'm here on the same page with Omer and Ricky. I think everybody has done astonishingly well. I wouldn't thought that I would come and say, that the big portion of the banks in several geographies, like we are present in around roughly 20 countries, and you see, I think everybody was fearing that, how is this working from home transition going to happen, right? How are we going to, assist the customers? And everybody were foreseeing that this is the actual crisis. And I think, to their point, everybody moved a lot faster than expected. But to be honest, what I see is, the potential, and I'm not saying it's a crisis, the potential crisis is yet to come. Because I think the next big step in banking, at least, is going to be 6 months from now, when all the delayed payments are going to be on the market again. People will start to, to make payments, hopefully.
Scratch their head for resources.
Yeah, and I think this is where we're going to see a behavior, a consumer behavior that, just as Ricky was mentioning, hasn't been noted before, because there hasn't been, that type of happening at a large scale before that. And if you couple that together with the fact that we are effectively and respectfully, banks are pushing a couple of digital services now onto the customers. Arguably, the savvy ones, they like it, but not everybody is technically savvy, especially if you think, for example, as a tier 1 or a tier 2 bank that has a large portfolio of customers. And I think what we're going to see is, how well those type of people are going to, interact. Can they adapt to the digital space, fast enough? Is the digital service that the banks are offering personalized enough so that conversion rates and advisory don't necessarily drop. So for me, I would say that I was positively impressed in a lot of countries. I saw it obviously in UK. I saw it in Central and Western Europe. Asia, we know that everybody in Asia is moving very, very fast anyway, right? But I think we are yet to pass, let's say, the crisis, and there's a couple of things that are coming on the horizon, on the experience and on the risk level that we definitely, as let's say, as an ecosystem, we need to handle.
6 months. Omer, this is likely still the realm of the current management in Banca Transilvania, not the future one. So I don't know how you look at it, but I think the audience, and I think everybody wants to see a little bit of a debate of who has to win more.
I mean,
current situation. Is it the incumbents or is it the challengers?
No, this is something, especially as regard to the payment performances. We have seen also I definitely agree with Ricky that all the scoring models, all the ratings we had, all the IFRS 9 models or Bureau de Credit ratings, they are not relevant anymore. I mean, there were different businesses, different salaries, different cash flows, but on the other hand, we are a micro lender bank. We grew, like Vaspargo was saying, small business medium. We grew by giving small loans, big volumes, working sometimes even efficiently in the areas that other banks are not active. But those customers are usually more resilient, and we have seen also individual customers, they try to pay their dues. You don't want to lose your house. If you are a big company with a good group with a couple of businesses, you may just give up one of your businesses, but you don't give your house where your kids, your family lives. You don't give your small agriculture, give up your small agricultural land. So indeed, now everything looks okay because the customers don't need to pay. And in Romania, we have this 9-month moratorium, so that as long as you don't have to pay, you don't have a bad credit history. And at one point in the near future, February, March 2021 will come, and you have to pay your installment plus something. So that actually during the next 9 months, we should create more business, more meat on the bone, so that people can pay more than what they used to pay previously. But still, Eastern Europe, Southern Eastern Europe has this advantage, although our finance minister wouldn't like me saying this, there's always this unfiscal side of the economy, under the mattress saving. So people bring this up, and they will be bringing. Also, we see increase in our deposits. We didn't, in some of the cases where customers who asked for moratorium, they started coming and paying. They said that I want to keep a clean history. But still, economic crisis is about to come. But as regard to the customers, because we are the basic definition of universal bank, we have farmers in the Moldovan region of the country. We have in Cluj and Bucharest programmers from IT sector. So all types of customers are within our portfolio. But what we did, and which is functioning, we want to maintain it further. we have this digital hour now. Our branches, agencies, they don't close. We used to close them at 5:30. Now we are closing them at 4:30. But all our personnel who is coming after 4:30, we are doing transactions only our digital channels, recyclers, ATMs, machinery, and our personnel is helping the customers to teach, to learn how to use these options, and it helps a lot. Because a customer who's doing it 3 times in the branch, then really captures it and that, tries to do it from home or from wherever is. So I'll say we are in this positive sense, we are contaminating our customer base quite rapidly, and they are embracing it. So that, as I said, it seems that we underestimated. We said that Romania is not ready, financial education is low, but actually our expectations were wrong, and we didn't make the extra effort, the extra mile to show how it functions. We wanted them to learn riding a bicycle just because we gave them a bicycle. Nobody kept them for a while to teach. Now we are trying to do this, and we are positive. Definitely, as a big lender, we have to be optimistic. Also, we cannot be pessimist and continue lending. But when we see also the drive to for the investment loans supported by the government programs as well, we think that at least Romania and part of the region might be performing well. We can create this meat on the bone so that people can be paying better. But also the authorities will need to change their approach in terms of calculations, provisioning models, or customer profiling. So that while we invest, I guess national banks, European Central Bank, or other authorities, supervisory bodies need to adapt themselves to the new economic reality, but also to the digital reality. For the first time in our history, this year we will be having a National Bank of Romania audit online. So it is. So I'll say things are happening already. I'm sure that this will leave some positive, good discharge behind as well.
Interesting.
Thank you, Ricky. What's your relationship with the regulators? If you're a challenger, does this help you? Does this, on the contrary, block you? Is it a mix?
I mean, well, the interesting thing is the UK was one of the pioneers in changing regulation to allow new challengers into the market, and it was actually a long since gone government initiative to. We've had a few different leaders here in the UK over the last couple of years, but George Osborne and David Cameron were very, very keen on promoting competition in banking. It came off a load of trends and sort of historic initiatives and areas where the regulator actually felt there wasn't enough competition in the market, as well as the politicians at the time. And so we were the second people through that gate in terms of getting a new digital banking license. I think the regulator is therefore, I would say, cautiously behind the challengers. Don't get me wrong, if you step the wrong side of the line, they will still make sure you're clear about your responsibilities as a regulated bank. But it's actually been a very productive relationship with them so far. I mean, going back to your original question, I mean, I think the UK is probably quite different from Romania because of where it is in that innovation cycle. I think one of the challenges, I do think that this crisis will massively benefit the challengers. The main reason for that is that, the incumbent banks have very big, bad debt problems at this point and real challenges with forbearance. And while they have been digitizing over the last few years, and indeed are continuing to digitize, I think that while digitization would probably have been the sort of #1 focus for most of the UK challenges for the last 2-3 years, a lot of those luxury projects. So, for example, Bow, which was a retail bank that was started up by RBS, was closed as one of the first acts post the crisis in response. And I think that is typifies what you're seeing here, and actually sounds like slightly less forward-looking than Omer and Bank of Transylvania. But a lot of what they're spending their time on now is worrying about their legacy portfolios. And normally I wouldn't say it's an advantage to have we've got about a £500 million balance sheet, and normally I would say that's a disadvantage. But at the moment, it's a real advantage because we don't have a lot of bad debt coming through. While we do have reasonably low levels of forbearance, and most of our portfolios are in 1-2% forbearance, not 20, 40. I've even heard 60% of mortgages in certain portfolios in forbearance, so taking a payment holiday. We actually have most of our powder dry to focus on customer acquisition, building the services that customers will need. And I actually genuinely think those services will change and be built slightly differently as a consequence of the crisis. I think needs have evolved. I think consumer preferences and consumer priorities will probably shift strongly to safety. But I don't think, at least in the UK, that's going to drive a flight to brand. I mean, before I started Tandem, loads of people said, "Oh, no, nobody will come and use a new bank, with a brand they've never heard of." As it turned out, people were actually flocking away from actually the negative brand equity that the financial crisis had driven in banks like RBS with Fred the Shred and even Lloyd's and some of the Barclays, the traditional brands, had quite a lot of, particularly for a younger generation, I suppose, brand taint about them, which is, I don't want to be associated with this institution. I don't care if it's got 100 years experience. I want Tandem, I want Monzo, I want Starling in my pocket. That's what I want to pull out. That's what I want to represent as in the world. So I think brand has actually oddly been massively in favor of the challengers in the UK. And I will see whether that continues. But I suspect that will continue through the crisis.
I'm sorry, I guess I have a video connection issue. I don't know if you see me.
We don't see you, Omar. We don't see you.
I'm trying to change the connection now, but here I see also a couple of questions about challenger banks, traditional banks. We are definitely for larger banking groups, it is very difficult to adapt things, the different cultures. We are ourselves have been more or less a challenger bank, coming from a small city, from a small country. We had to prove ourselves, from the last in the market to the largest bank in the market. It had been 26 years. So we were a couple of years ago, we were also thinking, can we service 500,000 customers? Now we have almost 4.5 million active customers. But I think we have a lot to learn from Tandem or from other challenger banks. And this is our also philosophy. We said that, okay, we have to become, because we don't have a mother bank, we don't have a single shareholder who knows everything and who will teach us everything. So we have to unfortunately make our own mistakes. We cannot blame head office or mother bank for what we do. Then we said, okay, we will become the best early adapter. So we look from Australia to Canada, to Mexico, to Poland, to banks, to traditional banks, but also to challenger platforms or banks. And we try to adapt what we consider relevant. And this becomes an advantage in our case, as long as definitely we can deliver in time. I mean, we don't delay it much, but we are quite comfortable also. I totally agree. I mean, when you have a huge balance sheet and when you have a huge number of customers, every moment is becoming like a big Navy ship. It's always good to have the small boat so that you can sail through. But I guess there will be all changes will bring lots of opportunities to banks like us, mid-sized, with not a big legacy and more flexible decision-making mechanisms.
Interesting.
That's very interesting. I'd like to take just a 1 second break and ask Theo how he's looking at this. We are working for challenger banks. We're working for mainstream banks, including Banca Transilvania here. What's the catch? Is there a winner that based on that category? Is the winner based on what you do during this time? Is it a matter of how much capital or how much bad debt on your balance sheet you have? What do you think?
Look, Sergio, I'm a technologist. I'm not necessarily a banker, but I do understand. You know, when you do a couple, you know, for an amount of years, a lot of time, you start to understand, you know, what both Omer and Ricky are talking about. I think if there's something that's going to happen is, you know, I think the ecosystem will come together better, right? And let me give you some examples. What I mean by that. I mean, we always, for the last 5 years, we keep having this talk about, you know, fintechs, challengers, banks, neobanks, startups, and so on and so forth, right? And there's always, you know, how they can work together and stuff like that. But if you look, right, irrespective of, I mean, we're working also in the UK market, and I get what Ricky is saying, right? The market, it's you know, more advanced in terms of, you know, what's the basis than arguably CEE. But I think the opportunity, the biggest opportunity for the next 2 years is not going to lie with current accounts or micro lending, or, you know, I think we are looking at an opportunity that's far bigger on bringing all those, you know, complex financial services, financial products into the market. Because irrespective of the fact that you onboard and you get a credit card, right, there's still arguably at least 90% of the services and products that are not being digitized at this point, right? And I think it's either the challenger or the, you know, the big banks who are going to move swiftly into that space and start bringing, you know, apart from deposits and credit cards, they will start bringing, you know, mortgages and other unsecured lending, trade finance, why not wealth management, private pensions, unit links, and so on and so forth. So start to bring over a period of 2-3 years those products and services, arguably decompose them, and you know, allow the customer to assemble them together based on his personal preferences and personal experience. And this is how you know, this is from my side as a technologist and as a customer of a bank, this is the biggest opportunity, that long-term opportunity that lies within the market from the customer perspective, right? Is the ability to emerge into an era where I'm not doing only the easy to set up products, but I'm actually having access to a real personalized, you know, wide range of services from the bank. And this is where I believe working together as a, you know, as a specialized challenger, right? Because you have the speed advantage. You will move, for example, and you will bring, I don't know, let's say a bunch of SME financial products into the market. And, you know, a different challenger or startup will concentrate on, you know, risk assessment and stuff like that. And I think understanding that, you know, the race for an end-to-end digitization of the bank is really on. I think this is what's going to galvanize the relationships between the tier 1 banks, the universal banks, that, you know, some of the things they will do themselves, some of the things are definitely going to happen through partnerships. So this is how I see the two worlds actually coming together, and this is how I see you know, us as consumers taking benefit of that coming together.
Is there a technology race that is taking place now in understanding consumer behavior and shifts in consumer behavior in response to the lockdown, in response to the financial crisis, in response to different patterns of behavior? Is that something that we are looking at? Is it about how fast you learn new things about your consumers, your AI and your understanding of data? and stuff like that? Or is it about, you know, building flows that are responding to the traditional way, to the traditional products and so on, but perhaps, you know, provide more of that in the mobile phones and in the web interfaces for the consumer?
Yeah, I mean, our view has always been, and I don't think it's particularly COVID driven, but that what needs to happen in banking is that we move away from this concept of which is very bank centric and regulator centric of financial products. And I use the example of, you know, they say contrast a mortgage and a personal loan. You know, a mortgage is actually a solution. It's a house buying solution. I want to buy a house. It's a crappy solution. You know, it needs to be taken online and made a hell of a lot more efficient. But actually at least it addresses the customer problem. Very non-specific thing that requires the customer to self-serve, you know, determine what type of problem it is. So they might be using an unsecured personal loan to buy a car, but actually it's not very well designed for that. So, you know, auto finance is a better solution, even if it might sometimes be more expensive. So packaging up those old products into actually digital solutions that provide a bit more value for the customer and a little bit more just not just user experience, but also value and explainability is really important. Now, I've seen a lot of questions on AI. One of the big differentiators Tandem has versus its peers is we've invested a lot in data in our AI stack. I mean, it does then allow you to personalize for different customers those services. So, for example, you know, if we're and interesting, we've had because we bought Harrods Bank, which was a lot of slightly older customers. You know, we've had to personalize fairly substantially. When we first brought them on board, we had a complaint from a customer, which was that we didn't have Dame in our customer database. So she didn't like being addressed as Mrs. Angela Smith, or that wasn't her name, but you know, she wanted to be Dame Angela Smith. So this obviously wasn't a use case we designed for in our, you know, fabulous new millennial bank. So there was a challenge we had to contend with. There's one that, you know, has become more and more relevant, and actually you are able to customize quite a lot. Although I think that is something that is only just starting. If you look at the N26s, the Monzos, you know, they have one interface. The interface does not shift or change. The set of services is designed for a customer segment, and actually those cannot intelligently adjust to the customers that they're dealing with. And I think that will be the next frontier. Although, not to say people aren't using AI in different contexts, but mostly now it's being used, you know, in a more traditional bank way to bring down the cost to serve, or you know, organize and automate, you know, customer service queries, etc.
If I may add, sorry.
Yeah, tuck in.
Sure.
So if I may add something, I'm fully on the same page here. I mean, I think we are leaving away the era where we're talking about products, right? And, you know, people think about it, even, you know, the way banks are structured, right? You are head of lending, you are head of deposits, and so on and so forth, right? And we are slightly moving, but surely moving into the era where we measure customer journeys, right? It doesn't really matter, you know, what products are being surfaced. So we are, for example, having a great cooperation with some of the banks in CEE, who some of them have built customer journeys that have nothing to do with lending products or deposit products, right? They are merely surfacing, you know, telco products, retail, travel services, and so on and so forth. So we are witnessing an era where we all need to stop thinking about products and touch points and start measuring, you know, the effectiveness of our customer journeys as a bank, and the NPS against the whole customer journey as a bank.
Yep. Yeah, and that ultimately those journeys need to drive outcomes that benefit the customer. And so we talk about maximizing customer lifetime value, which, you know, my business partner Matt Cooper, but that's about cash flow for the bank from a selfish perspective. We also talk about maximizing customer lifetime benefit, which is what benefit we're producing for the customer. And what's really interesting in financial services is there's a whole load of sources of benefit, whether that's psychological because of risk aversion or other things that we can provide that don't necessarily cost more money, but they do require us to deliver our solutions differently from a traditional bank.
True. So
I think we've lost Omer. He's just commented that
this is the moment, this is the glory moment of the challengers when when everything is
technology is working.
Absolutely, that they have absolutely no chance, and eventually the challengers would prevail. But now, seriously, I think we're on to something very, very important here, because it's about creating those experiences and responding to clients and responding to consumers. And the question is this something that creates a broader agile solution that is more to be served by the niche players, understanding that as a challenger you need to be niche, while if you want as an incumbent, especially as a leading market leading incumbent, you have to have the broad spectrum and offer everything to everyone. Is this an opportunity to further tailor the journeys to the extent of anticipating consumer behavior?
Yeah, look, I do think there is that opportunity. I think one of the things that you do need to be careful, because what you end up coming down to when you personalize, and really this is where you really do require not even machining but deep learning to be able to do this effectively. You need to keep it slightly simple, because if you imagine, obviously you take your customer segments, you're very general, these slightly Gen X's and these millennials, etc. Then you discover they're all completely different. Their risk aversion isn't necessarily correlated by that segment. And then when you break it down even further, you discover that even within the similar people within that segment, actually depending on the time of day and the time of the month, their preferences differ and vary. So if you try and be too clever about it, you can end up producing an overly complex product. And I think certainly when we first came to market, we were trying really hard, and we had a sort of essentially the idea of a sort of thread of recommendations and analysis that was coming out of your transactions, which as it happens, which we could completely tailor and was completely individualized for every single customer. But indeed, what we found there is you end up making a lot of effort on a service. So, for example, we built energy switching that actually only serves a very small proportion of your customers. So your investment of hundreds of thousands or millions of pounds, only spreads across a small segment of a subsegment of your customer. So we have moved to sort of generalize that and actually be more intelligent about producing services that address larger chunks. You can't serve a segment and design your product for a segment, but it does mean that you need to also think about generalizable needs, not focus in on micro needs of micro segments, because you just think the return on investment.
Isn't this, contradicting the at least the literature, the philosophy of the shelf of one, the hyper personalization, the journeys that are following you wherever you are.
Maybe we'll go with super personalization rather than hyper personalization. Look, there are market of one things that are easy to do. Response to transaction threads can be useful. So, for example, we forecast each customer's cash flow. That's not done on a generalized basis. That's done on their individual cash flow profile. We predict when they're going to run out of money, if they're going to hit problems with their bills. We can recommend tailored solutions. But when I say tailored solution, it's tailored to that market of one. If I'm investing in, for example, a service that helps you switch your utility bill, I need to be sure that the majority of my customers A, can, and B, want to switch their utility bill. Not even the majority, but a large minority are interested in that. So you're making sure that when you build journeys, coming back to your point, build customer services, those services are designed to suit enough of the market, can be within your niche, but then you can surface those on a market of one basis to your customers and serve them in an intelligent way, but being careful not to end up creating micro solutions, where you've got, developers developing an entire journey just for a segment of 3, where that really just doesn't make any sense.
So
yeah, I think this resonates with one of the questions that we had here about, would customers have the willingness to pay and the ability to pay for any new service that you would develop eventually? And that's making the whole wheel turn for all the players in the universe. But Theo, you wanted to say something to add on top of that.
Yeah, I mean, Sergio, I want to basically factor in another way of personalizing a service, right? And funny enough, I was in a panel, yet another panel this morning, and somebody asked me, what do you think are the roles of the future in a bank? And, I guess the pretty obvious role that, suits very well Ricky's speech is what I would call a digital product manager or digital product owner, the guy who are, understand customer behavior, understand risk and banking behavior, and, they also understand some sort of, data, technology, digital mix of channels and so on. So, but leaving that aside, I also recommended the role of what I call the digital relationship manager. Because the way I think, I get the AI part, we're using it, everybody is using it. And I constantly believe there are, progresses that are being made. However, there are, ways in which you can personalize a service just by, the way you interact with people. And if I'm getting back to my previous, topic around bringing more complex services and customer journeys to the forefront, talking about commercial financial services or SMEs certainly, or private banking. So you now have technologies like this type of video advisory interaction over the internet, co-browsing capabilities where you are basically immersed with that customer and basically have the possibility to advise them, to personalize that customer journey and that service offering, not necessarily only by artificial intelligence, but also by human intelligence, right? Because humans are effectively born intelligent, right? And let's be clear, all of us, we cherish a account manager or somebody, a service provider who is genuinely interested in us and is making an effort to advise us. Perhaps it doesn't necessarily fit with the high volume retail business, but like I said, there's a lot of other financial services that you can personalize through human and intelligence and technology collaborations like this one.
Welcome back, Ömer.
So I was listening from my tablet, but I managed to re-register myself thanks to Sergio. Theo, as far as I heard you, I would also contradict because again, from our own experience, there are customers who don't have any mood about the banker. I mean, we are living in a country where people have a special dress, a costume they wear for weddings, funerals, and the bank. And there are also people who don't want to speak to you in a pub when the moment they hear that you're a banker. So that
well, I'm not referring to that type of customer.
They speak to you. They speak different words. Omer. I mean, different words.
Indeed, in a mortgage credit, in a housing loan, people look into the banker's eye, try to get a confirmation if the choice of the apartment or the house is correct one. You always need this kind of emotional endorsements. But on the other hand, for many things, they don't want to wait in a queue. They don't want to wait for this human touch or whatever interaction they will have. So we were discussing with Sergio when it was about this the panel. I think the way that we deal with our customers, or what we do for our customers, will change a lot. I mean, they will not necessarily come for payments, foreign exchange transactions, but also they will come to their bank. So the change in the bank branch, they may change their utility provider, make a travel arrangement, buy their tickets to the museum or to a theater, and discuss about their personal finances. The personal finance management is going to be more and more important, especially in a zero or negative interest rate environment for the deposits. And well, say they will not take us seriously if you will try to just claim that we have the best foreign exchange offers for them. Because this is also the exchange office at the corner is doing it. You don't need to establish. You don't need to put 100 million euros of shareholders' money to establish a bank for it. But I guess we should find different ways of reaching different customers. So we will be quite configured in our relationship using data. That's for sure. I mean, we have enough history. This is kind of an advantage because we know the frequency of transactions of our customers for the last 25 years. What they are doing, the moment that they are doing 2-3 transactions in a toy store or mother care, we know that there is a baby in the house. So, but this is an easy thing, which also the challenger banks are guessing. But we know also other things in terms of saving or payment behaviors. So hopefully we will construct relevant models to interact, to be relevant with that for them actually further.
Thank you, Omer. I love the fact that, you know, as we proceed with the conversation, the intensity of the questions that we get on the chat is going up as well. So we're getting lots of interesting suggestions. Just to pick one question that I particularly liked, is it, you know, that the future banking roles are actually around product management, operations, and technology, and everything else is a collaboration with potential outside agents? And I may add to that, is it that product management and operations and technology would still remain core operations of the bank, or would they also be part of a broader collaboration between fintechs and incumbents?
I think it will be more of product and service management, because I don't know any bank, maybe I'm wrong, I hope I'm wrong, who invented a new lending product or a new deposit, a savings product in the last 20, 30 years. Everything, I mean, we rebrand them, but the only thing that we could invent, and we have invented or at least adapted, is the way, the channel we use to provide it, or how we interact. It's about procedures, it's about your internal organization. So the customer is using more or less the same product at the end. The time to deliver differs based on the model used. I'm not a big fan of claiming that the banks will become technology companies. The banks most probably should remain banks. I'm a lucky CEO in a traditional bank. I can retire from here and leave the pain to the next generations, but I think we should and we will have more technology partnerships. I mean, everything what we do in our system now, if we try to develop them by ourselves, we will not be able to have enough people, and we will waste a lot of money. Cooperating with you and with other, let's say, smaller companies, we get whatever we want, cheaper, faster, and also with an eye of the customer as well. We are very biased. I mean, in a management floor of a bank, everything is very arithmetic and very rigid. So sometimes discussing with our technology partners, we find solutions, new solutions to the problems that we didn't know it exists.
I'd like to underline cheaper and faster. Thank you, Omer.
We didn't start negotiating with our partners yet, sorry.
Okay.
Exactly. You want it even cheaper after this one. Yeah. So
okay, my bad. Never meant it.
Faster, better, cheaper.
Look, I mean, I think the interesting thing is, you know, and obviously we have a slightly different perspective because, you know, we do see ourselves as a technology company. Over half of our, you know, staff are coding solutions for customers rather than the other way around. But nonetheless, I think the key thing is identifying where your strategic differentiation, your strengths lie, and focusing on that. Now, there are challenges within a regulated context, because outsourcing anything requires authorization from the regulator and quite stringent contractual requirements, etc. At least here in the UK, I'm sure it's the same in Romania. And therefore, you often end up insourcing things that you might not be ideally suited to insource. From Tandem's point of view, we do see tech. We also see, ultimately a bank is a risk management machine, and decisioning, and in particular the sort of AI stack that we built around decisioning, and that decisioning impacts credit decisioning, obviously at origination, but also during the lifetime of the product, particularly for revolving products like cards. Fraud decisioning, we're using all of our own proprietary fraud decisioning engines at the moment. We do bring in external data sources. AML decisioning, where that doesn't drive the P&Ls directly, but obviously controls your regulatory risk in that area. Conduct, etc. So all these different aspects of risk need to be accurately modeled, accurately assessed, and the data stack and the sort of different modeling technologies, whether that be deep learning, AI, or machine learning, all can contribute to improving what we do as a business, which is ultimately manage risk from an internal perspective. From a customer perspective, we're sitting there providing solutions to their problems. From an internal perspective, we're managing risk.
I think this is an amazing panel. This is an amazing discussion, especially since Omer is back. Unfortunately, we're coming towards the end. We just have 4 minutes. I'd like each of you to have one sort of last word, last interaction on what do you expect. Well, what do you expect? What do you wish? If it's not an expectation, what is a wish to come out of this thing? Because obviously, the world is coming back to a sort of normal from the living point of view. We're not sure from the financial point of view what that new normal will be. We have seen massive digitalization over the last weeks, advance of digital interaction, of a need for digital. Is this going to die? Is this going to change? Are we going to see massive shifts in the structure of the industry? What do you hope, or what do you fear?
If I may, because I also saw a question, how there had been lots of changes, or changes in the operating models in technology. If things will go back to normal when the economic situation and the healthcare situation will go back to normal, I don't think so. But this is something also I wish for, that I hope that what we learned, what we started doing, we will maintain. When there were different outcomes for us. I mean, we even realized how many pages of documents we are asking our customers to sign when we are archiving them. When we need them, somebody scans them and sends them to us. So why don't we do this online? Why don't we keep everything on an application instead of depositing pages? We are every year planting 1 million trees in Romania. And then we are cutting half of them for our documentation. So I think most of the changes will remain. There will be definitely kind of a relaxation, but what I wish is that, especially for Romania, both the authorities and the central administration will help the supervisory body, including National Bank, but Minister of Finance, Minister of Economy, will help this effort, because banks or the financial system cannot digitalize itself, and while everything else is still on paper, still we have to stamp our documents. So again, I hope we will remember the benefits of it.
I'm going to have to run too. I mean, my hope, and it's a slightly more generalized one, is that actually all of the economy, the government, in their stimulus to come out of this, direct that in a way that can improve the world somewhat, and that might be improving customers' lives through better digital services and journeys. I personally hope that it'll also impact on climate awareness, and actually that some of the stimulus that comes through and some of the things we're thinking about in response, because ultimately COVID is an existential threat to humanity, and we spend an awful lot of time not thinking much about ourselves as a collaborative unit, humanity, and thinking about ourselves as a bunch of factions. But actually, there are a whole load of rising existential threats to the entire human race, and we do need to team together better to actually address those. And I hope that consciousness will come out of the crisis, but we'll see. I'm going to have to run. I've got a 1:30, but absolutely lovely to see you guys. Omer, it's an absolute pleasure to meet you. Theodore as well. So great to see you again. Thank you so much, guys.
Thank you.
Good.
Thank you.
Thank you very much.
Yeah, so let me just say my wish, and I think we can wrap it up. I'm sure Omer is a busy person. And I think it's a response to that question before, right? It's product management, operation, and technology being the core of the bank. Well, I would like to live in a world where the core of the bank is effectively customer. I would like to, for us to consider that instead of head of lending, head of channels, head of whatever, we have somebody who is head of customer success. And I see things changing a little bit in technology. I do certainly believe that they can change in a much more complex environment like financial services. But I think that's the way to move forward. And I think that the crisis is only emphasizing that products, services, technology are secondary actors in a business, and the primary actor is effectively the customer. And I would like to personally thank, as a customer of BT, to Omer, because based on all my interactions as an individual person and as having had several companies that worked with BT, I always felt like there was somebody in there, not an algorithm, not a technology, that I could reach out to, and have a frank and candid conversation. And I think that's a thing that is still going to stay with us for the next decade.
Amazing final punchline.
Thank you very much. Thanks a lot.
Yeah, it's been an amazing panel. Thank you so much, Theo. Thank you, Omer. Thank you, Ricky, now out of here. Thank you, Liz and Liza, for organizing it, and everyone who has contributed with questions or with watching us over the last 1 hour. I think it's amazing. Let's stick to the humanity in us and build it further through technology if that helps and where that helps. Thank you so much.
Thank you. Bye-bye.
Bye-bye.